Hey guys, hope you're having a great week. And last week I was on the golf course. Kind of wish I was out there right now. But this week back in the office, actually back in the Guntersville office today. This is where our processors are. It's actually my hometown. You can see behind me in my office here, Main Street here in downtown Guntersville. We're going to see the homecoming parade back there in a few hours. Looking forward to that. This year is a special homecoming to me personally. This is where I graduated. And this weekend we're celebrating our 30-year reunion. I can't believe it's been 30 years, so looking forward to the football game tonight, catching up with some friends. We're celebrating the 30-year reunion tomorrow night and catch up with a lot of folks we haven't seen in a long time, so looking forward to that. But speaking about 30 years, the 30-year interest rate, man, the mortgage rates have taken a beating over the last 12, 18 months. We've seen an appreciation in rates like we've never seen before, and a lot of that has to do with the momentum or the chaos, I'd like to say, that the feds have created with their very, very aggressive Fed funds monetary policy. I just want to talk about that for a second because we talk about fundamentals all the time. And you've been hearing me say this for probably ad nauseum for the last 6 months. Be patient, the fundamentals are there, the rates are going to have to come back down. What goes up must come down, right? But there's a lot of things in the charts that we're looking at historically, everything that we see, the way it is setting up and the way it has been set up, that rates will have to go down eventually. Now, next week, when it comes to the feds, they are going to announce their policy if they're going to raise or drop, and our expectation is that they're going to pause. They're not expected to do anything, but we really need to pay really close attention to what they say because there's been a lot of data over the last couple of months, housing data, jobs data, and I think we're starting to begin to see some of their tone to shift a little bit. We're seeing inflation come down very slowly. We are fighting some aspects of the inflation reports and the CPI reports. Energy costs, things like that is not helping. But there's a lot of other things that are going on that's going to cause rates to drop in time. Now, I wanted to show you a chart. I'm going to try to do this with my phone. I don't know how you'll be able to see this very well, but this is a chart courtesy of MBS Highway, Barry Habib, somebody that I follow very closely. And this is a chart that they showed. And I wanted to share it with you because this is showing this, this line here, if you can see this. This is indicating where the 10-year Treasury has been, over the last 20 or so years. And then this very aggressive line right here, this is where the Fed's creating, moving the Fed fund rates. And these red circles are at times in the last 20 years where when they have gotten very aggressive and they've raised their Fed funds rates above the 10-year yield. In other words, when they've gotten to that point, look what happens every time. They get over aggressive, and we're in that posture right now. This has gotten really aggressive right here. And the expectation is that they're going to have to start giving us relief. We've seen it happen 4 times in the last 40 years, actually 4 times in the last 20 years rather, and every single time they've had to lower their Fed funds rates. Partly because what they're doing is going to help inflation, it's going to slow the economy down. I'm not, rooting for a recession, but if you study the equity markets right now, some would say potentially they've been overbought a little bit. And I'm not saying, I think I said it a week or so ago, I'm not saying I would necessarily short the market, but I would not necessarily short the market either. I mean, the reality is equities have been on a historic run. And again, what goes up must come down. And so be patient. I know that rates in the last couple of weeks have inched very slowly higher and higher and higher. Thankfully, we're not seeing a lot of volatility this past week. Rates are up a little bit today, but again, we're waiting on some of the big elephant numbers, fundamental aspects of the market to come out in the narrative and what the Fed say next week. So we're gonna be watching that really closely. Still in a floating pattern, so if we get a contract, still looking to see what happens in the next few weeks. But you guys have a great weekend. I'm gonna have a 30-year reunion and have some fun with some old friends. And you guys call anything we can do for you, let us know.